Imagine this: the world feels uncertain, businesses are closing, stock prices are falling, and everyone around you is panicking. People are worried about losing jobs, savings, and stability. But here's the truth that most don't see: recessions aren't just a time of loss, they're a time of opportunity. While fear drives the majority into hiding, those who understand how to think strategically use recessions to get ahead. Today, we're going to uncover exactly how you can benefit from an economic downturn, turn challenges into wealth, building opportunities, and position yourself for massive success when the economy bounces back. One of the most powerful ways to benefit from a recession is by investing in undervalued assets. During an economic downturn, fear drives prices down, creating opportunities that don't exist during periods of stability. Stocks, real estate, and even businesses that were previously considered expensive suddenly become affordable, often at prices far below their true intrinsic value. While many people panic and sell off their holdings, savvy investors recognize that this is the time to acquire high-quality assets at a discount. Take the stock market, for example. During recessions, even strong, well-managed companies often see their stock prices fall dramatically. The natural reaction for most investors is fear. The market is falling. I should sell before I lose everything. However, those who understand value see the opposite. They see an opportunity to buy a stake in companies at a price that would be unattainable during a boom. Historically, the greatest gains in the stock market often occur after recessions, when the economy rebounds and undervalued assets soar in value. Real estate is another arena where recessions create opportunities. Property values tend to decline during economic slowdowns, and sellers often become motivated to offload their assets quickly. This can allow investors to purchase properties at discounted prices. Over time, these properties can generate rental income and appreciate in value, creating long-term wealth. People who understand the cyclical nature of the market know that buying during a recession can set them up for significant financial gains when the economy recovers. Businesses themselves can also be undervalued during recessions. Many companies face cash flow problems or market skepticism, even if they have solid fundamentals. This creates opportunities for investors or entrepreneurs to acquire businesses at reduced prices or invest in struggling companies with strong potential. The key is to identify assets with intrinsic value, companies or properties that will remain strong once the temporary economic challenges pass. By doing so, you position yourself for substantial gains while others are paralyzed by fear. It's important to understand the mindset required to benefit from undervalued assets. 8. Most people are guided by fear and emotion, selling at the bottom and missing the recovery. Those who benefit from a recession adopt a disciplined, long-term perspective. They recognize that temporary market declines are not permanent losses. They are opportunities to purchase assets that will grow over time. Patience and strategic thinking are essential. Buying undervalued assets isn't about quick wins. It's about positioning yourself to capitalize on long-term growth. Another critical component is research and knowledge. You can't blindly buy anything that appears cheap. Not every asset that declines in price is a good investment. The wealthy carefully analyze financial statements, market trends, and economic indicators to identify assets that are likely to recover and prosper. They focus on fundamentals, not hype or speculation. This ensures that their investments are grounded in reality and have a high probability of long-term success. Finally, acquiring undervalued assets during a recession builds momentum for wealth accumulation. Each smart purchase made at a discount not only grows in value over time, but also provides confidence and experience, reinforcing the habit of strategic investing. This approach separates those who remain financially stagnant from those who emerge from a recession stronger than ever. In essence, investing in undervalued assets during a recession is about recognizing opportunity where others see only fear. It requires patience, knowledge, and a willingness to act when the majority hesitates. Stocks, real estate, and businesses that are temporarily undervalued become powerful tools for wealth creation. Those who master this strategy position themselves to benefit significantly when the economy rebounds, turning a period of uncertainty into a time of financial growth and opportunity. The second key to benefiting from a recession is building and diversifying multiple income streams. During economic downturns, relying solely on a single source of income, typically a job, is one of the riskiest financial strategies you can have. Companies downsize, industries contract, and job security becomes fragile. People who depend entirely on their paycheck are highly vulnerable, while those with multiple income streams are better positioned not only to survive but to thrive. 8. Understanding this principle is essential if you want to turn a recession into an opportunity. The first step in diversifying income is recognizing that a single salary can never provide true financial freedom. No matter how high your earnings, it is limited by your time and energy. Working longer hours or taking on extra shifts can temporarily increase income, but it doesn't scale, and it often comes at the expense of your health and personal life. Those who create additional streams of income through investments, side businesses, or passive income sources escape this limitation. Each new income stream acts as a multiplier, increasing overall earning potential without requiring more hours. Investments are one of the most effective ways to create additional income streams. Stocks, real estate, dividend-paying assets, or even small business ventures can generate money independently of your active work. During a recession, these opportunities are often more accessible. As prices drop and risk-averse individuals hesitate to enter the market, by allocating resources strategically, you can create income that continues to flow even if your primary job is affected by layoffs or reduced hours. The key is consistency and discipline. Regularly investing and reinvesting returns compounds wealth over time, creating a financial safety net that grows even in uncertain economic conditions. Side businesses or freelance work also provide essential diversification, skills you already possess. Writing, consulting, design, or digital services can be leveraged to earn money outside of your main employment. In a recession, people and businesses still need services, often more than ever, because they are looking to cut costs or innovate to survive. By identifying areas of demand and offering your expertise, you create an additional layer of income that can supplement your main job. These side ventures may even evolve into larger businesses, further expanding your financial independence. Diversification also mitigates risk. During a recession, industries shrink unevenly. Some sectors experience significant losses, while others remain stable or even grow. By spreading income across multiple sources and industries, you reduce the impact of a downturn on your overall financial situation. This approach provides resilience and allows you to take advantage of opportunities that arise when certain sectors recover faster than others. Wealthy individuals rarely place all their eggs in one basket. Instead, they strategically allocate resources across income streams to balance growth and risk. Another advantage of multiple income streams is the mindset it cultivates. People who depend on one source of income often adopt a reactive, survival-focused approach to finances. Those with diversified income become proactive, thinking strategically about opportunities, markets, and potential growth areas. They learn to identify gaps, innovate, and take calculated risks that others would avoid out of fear. This mindset not only protects wealth during recessions, but also positions them to accumulate significant gains once the economy rebounds. In summary, relying solely on a paycheck during a recession is a recipe for financial vulnerability. Building and diversifying multiple income streams provides stability, reduces risk, and opens opportunities for wealth accumulation. Investments, side businesses, and passive income sources allow you to grow financially even in uncertain times. Those who embrace this strategy are not just surviving a recession, they are positioning themselves to thrive, turning economic challenges into stepping stones for long-term prosperity. By diversifying your income, you gain freedom, resilience, and the ability to capitalize on opportunities when others are constrained by fear. The third way to benefit from a recession is by learning and upgrading your skills. During economic downturns, opportunities often shrink, competition increases, and job security becomes uncertain. Many people panic. 8. Seeing layoffs and closures as threats to their future. But those who approach a recession strategically understand that it's also the perfect time to invest in themselves. By improving your skills, gaining new knowledge, or acquiring certifications, you position yourself to not only survive the economic downturn, but to thrive when the recovery begins. One of the biggest mistakes people make during recessions is waiting for opportunity to come to them. They assume that external circumstances like the job market or market conditions are the only factors that determine their success. In reality, the individuals who excel during tough times are those who take proactive steps to enhance their value. By learning new skills, whether technical, entrepreneurial, or creative, you increase your versatility and marketability. This makes you more attractive to employers, clients, or business partners. 8. And opens doors that would otherwise remain closed. The type of skills you acquire during a recession can significantly influence your financial trajectory. High-demand skills such as digital marketing, coding, financial literacy, or business management can create immediate opportunities for freelance work, side businesses, or career advancement. Meanwhile, soft skills like communication, problem solving, and leadership increase your ability to navigate challenging situations and seize opportunities that others may overlook. By investing in both technical and interpersonal skills, you become more resilient and better equipped to adapt to a changing economic landscape. Entrepreneurial skills are particularly valuable during a recession. Many successful businesses are born during tough economic times because market needs shift and gaps appear. Learning how to identify opportunities, create solutions, and manage resources efficiently can turn challenges into profitable ventures. First-class investors and entrepreneurs often use recessions as a launchpad, starting businesses that meet the unique demands of the time. Those who have upgraded their skills are ready to act quickly, giving them a competitive advantage over those who remained stagnant. Continuous learning also fosters a mindset of growth and adaptability. Recessions are unpredictable, and rigid thinking can lead to missed opportunities. By committing to personal and professional development, you train yourself to think critically, analyze situations, and innovate. This mindset not only helps you navigate the recession successfully, but also equips you with tools for long-term financial success. People who invest in themselves consistently outperform those who rely solely on luck or circumstance. Another important factor is timing. A recession is often slower in terms of new opportunities, giving you the chance to focus on development without distractions. Workshops, online courses, and certifications can be completed during this period, preparing you to act decisively when the economy recovers. Skills acquired during a downturn become valuable assets when competition intensifies in the recovery phase, allowing you to command higher salaries, launch profitable ventures, or expand your investment strategies. Finally, investing in yourself is low risk and high reward. Unlike speculative investments, the knowledge and skills you gain cannot be taken away from you. They enhance your earning potential, improve your decision making, and open doors to opportunities that otherwise might not exist. Those who ignore this principle remain vulnerable to market fluctuations, while those who commit to continuous learning create a foundation for financial independence and wealth accumulation. In essence, learning and upgrading your skills during a recession is a powerful strategy to turn challenges into opportunities. It increases your value, equips you to adapt to shifting circumstances, and positions you to capitalize on the recovery. By proactively investing in yourself, You transform economic downturns from periods of fear into stepping stones for long-term success and prosperity. The more knowledge and skills you acquire now, the greater your advantage will be when the economy rebounds. The fourth key to benefiting from a recession is practicing patience and strategic thinking. While most people panic when the economy slows down, reacting impulsively to fear, those who succeed understand that a recession is not just a period of risk. It's a period that rewards discipline, foresight, and calculated action. By taking a long-term perspective and making deliberate decisions, you can turn a recession into one of the most advantageous times for building wealth. One of the first lessons in strategic thinking during a recession is to resist the urge to make impulsive financial decisions. Many individuals sell assets at a loss, cut costs indiscriminately, or avoid investments entirely out of fear. While these reactions are understandable, they often result in missed opportunities and long-term setbacks. Wealthy individuals, by contrast, take the time to analyze the situation, understand the underlying factors affecting markets, and make informed choices. They recognize that temporary market declines are not permanent losses, but rather windows to acquire assets, grow businesses, or improve personal skills at discounted prices. Patience is critical because wealth built during recessions rarely happens overnight. Those who react emotionally may give up too soon or enter investments prematurely without proper planning. Strategic thinkers understand that timing is everything. They wait for the right moment to act, assess risk carefully, and commit only when the opportunity aligns with their long-term goals. For example, purchasing undervalued stocks, acquiring discounted property, or investing in a struggling business requires patience, both in identifying the opportunity and in waiting for the eventual payoff. Without patience, people miss the chance to capitalize on these advantageous conditions. Another aspect of strategic thinking is preparing for the long-term recovery. Recessions are cyclical, and economic rebounds create significant wealth for those who position themselves correctly. By thinking beyond immediate challenges and focusing on post-recession opportunities, you can make decisions that compound over time. 8. This might mean holding on to investments through volatility, continuing to save aggressively, or carefully expanding a business. Despite short-term economic pressures, strategic thinkers anticipate the market's recovery and align their actions to benefit from it rather than being swept away by fear. Risk management is also a critical component of strategic thinking during a recession. Acting without strategy can be catastrophic, but calculated risks can yield tremendous rewards. Wealthy individuals analyze potential returns versus possible losses before making a move. They diversify assets, maintain liquidity, and ensure that every decision supports their broader financial objectives. In contrast, those who lack strategic thinking either avoid all risk, missing key opportunities, or take reckless chances that can lead to significant setbacks. The difference lies in careful planning, research, and discipline. Strategic thinking also applies to personal and professional development. Patience allows you to focus on upgrading skills, building networks, and exploring new opportunities that may not yield immediate results but create long-term advantages. For example, learning a high-demand skill, cultivating relationships with mentors, or starting a side business during a recession may not pay off instantly, but when the economy rebounds, these efforts can accelerate wealth creation far beyond what reactive decision-making could achieve. Finally, practicing patience and strategic thinking cultivates confidence. When you approach a recession with a well-thought-out plan, you are less likely to succumb to fear-driven behaviors and more likely to make decisions that yield long-term benefits. The majority of people focus on survival, but those who maintain discipline and act strategically position themselves to thrive while others struggle. In summary, patience and strategic thinking are essential for turning a recession into an opportunity rather than a setback. Avoid impulsive reactions, plan for the long term, Manage risk carefully and maintain discipline in both financial and personal development decisions. By doing so, you not only protect your wealth during economic downturns, but also position yourself to capitalize on growth when the economy recovers. Those who master patience and strategy emerge stronger, wealthier, and better prepared for long-term success.